Hi everyone! In the last lesson we learned how to plan the development of a project, and today we will talk about how to calculate how much a project can earn. Why is it important? I will retell the classic anecdote dialogue. I started a business there, can you imagine? Oh, cool, what are you doing and how are you doing? I sell $1 bills at 90 cents. Turnover is crazy, the profit not calculated yet. As you understand, this business is obviously unprofitable, since we spend $1 from each transaction and get 90 cents. In order not to be such this businessman, we need to calculate in advance how much we will spend and how much we will receive from the project. Unit economy allows you to estimate how much we get from one transaction or from one user. Financial models allow you to estimate how much we receive and spend on the entire project. To calculate the economics of physical product, we need to calculate for one unit of the product how much the raw material cost. It is really easy to calculate for one piece. How much does it cost to rent a production facility? It's more difficult there, but in general you need to estimate how many units of your goods you can produce in a conditional month and divide the cost of rent for a month by these numbers. Rental or depreciation of equipment and software. There, as in the case of renting room, you need to divide the cost of rent for months by the number of units produced during this time. Rental or depreciation of equipment and software. There, as in the case of renting room, you need to divide the cost of rent for months by the number of units produced during this time. Employee salary. There, you need to take the total salary of all employees for the month and divide by the number of units produced of this month. Marketing. There we need to estimate how much we spend on promotion to make one sale. Delivery. If we out-self-deliver the product to consumer or stores, then we need to calculate how much the delivery of one unit costs. Well, at the very end, you need to enter the price at which we sell the goods. Subtracting for this price all previous points, we'll get a net profit from one sale. And also we will able to estimate how much the investment in the production of certain amount of the product will bring. With such a scheme, the main thing is that your profit is simply positive. With a positive economy, you can already try to raise prices or optimize production costs to make the business more marginal. For IT product, you can generally use the same scheme, except that there will be no source material, rent of promotion facility will be replaced by on office rent. You will have service and work computers as equipment. In marketing, you need to calculate not the cost of one sales, but the cost to attract users, and instead of the cost you need to specify LTV, lifetime value, the income that one user brings. But then you will get not quite correct values. Since online production, the number of employees you have does not linearly depend on the number of users. It takes twice as many turners to produce 1000 screws as it does to produce 500 screws. In IT, you don't have an urgent need to increase the team if your number of users has grown from 100 to the first 100,000. Therefore, in IT, the unit economy is often considered simply as the difference between LTV and CAC, cost of acquisition customers. With this approach, the unit economy is calculated for different marketing channels in order to understand which one is most profitable to work with. Yes, this approach doesn't take into account any cost other than marketing, but the bottom line is that it's more convenient to keep the rest of the cost under control using the financial model. What is the financial model? The financial model shows how much you spend and earn in total for a month or another period of time. Convenient for you. Financial model shows how much you spend and earn in total for months or another period of time convenient for you. In order to calculate the financial model, you need to take into account the same fields as in the unit economy, but all expenses and incomes must be specified for the month. The rows usually contain articles of expenses and income, and the columns of the month. For convenience, don't forget to put on separate lines the number of users or sales per month and accordingly the income from the user per month and the cost of the product sold. Leave the top few lines for summary calculation: expense, income, and profit. Don't immediately mix the expenses and income, because unlike income, you can actually predict expenses roughly, and it's from these figures that you will proceed when attracting investment. In the description of the video, I have attracted a link to a table with an example of financial model. Thank you for watching. Write clarifying questions and ideas for new lesson in the comment. In the next lesson, we will understand what a marketing strategy is. In the description of the video, you can find useful links, and if you don't watch the video immediately after release, then most likely a link to the next lesson has already appeared in the corner. Bye everyone!